I'm Charlotte McLeod with investingnews.com, and here today with me is John Rubino. He publishes a Substack newsletter. It's rubino.substack.com. We'll have the link in the video description for everybody. Thank you so much for being here. Great to have you.
Hi, Charlotte. It's great to meet you.
Really good to be meeting you, with you for the first time. I was thinking I've got quite a lot of questions for you today. We're going to go in a precious metals direction. But since it is our first time talking, I thought maybe we could start with gold and where you see it right now in the current cycle. Quite a broad question.
Yeah, gold's back in a bull market now, which is it's nice. It was kind of quiet for a few years there, and now it's starting to rock again. As we're speaking right now, gold is just about touching $2,500 an ounce U.S. And that's an all-time high, and that's good for the mining stocks. Everything related to gold responds well when gold is moving like that. And it occurs to me that maybe we should step back and talk a little bit about why gold matters in the first place, because gold is a big deal, and it's becoming a bigger deal, and that's because it is real money. For 3,000 years, gold has been used as a store of value and many times as a currency. And so that with that kind of history, you can say with some degree of certainty that the next time we screw up the financial system, gold will behave the way it's always behaved. A lot of capital will flow into it. Its price in local currency terms will go up, and it'll protect people's purchasing power. So since we are obviously screwing up the global financial system, it's reasonable to look at gold as something that we should all be owning some of. And then the question becomes, how much of your net worth do you want to put into something like gold? And that's a fun debate to have. And people are all over the place, from 5% to 50% to 75%. And I personally am kind of at the high end of that range. I own an awful lot of gold now relative to other stuff. So I'm happy with how things are going today. And the expectation is that when the dollar, the US dollar and the Canadian dollar and the euro and the yen and probably the Chinese yuan all start losing value in a disruptive, disorderly way, that gold and potentially silver are going to go parabolic. They're going to protect us, and they're going to attract a lot of capital. And that's why gold is interesting right now, and why it should be one of the big stories of the coming decade.
Okay, I think it's really good to take that step back, get your big picture view on gold and why we should be owning gold right now. And it is, as you mentioned, it's an auspicious day for us to be speaking about gold with the price at all-time highs. Quite remarkable. There's a lot of drivers, some of which you've already outlined in terms of gold. What would you pick out as the main price driver for the metal at the moment?
Well, the global financial system is in a crisis. You might even call it a death spiral right now. And basically, again, to step back a bit, in 1971, the U.S. took the rest of the world off the last vestiges of the gold standard and left everybody with what are called fiat currencies, which aren't backed by anything. They just exist by government decree or fiat. And what those things are is basically unlimited credit cards for the countries that are creating and managing them. So we got a world that is what you would expect with what we know about human nature when you hand unlimited credit cards to politicians and their bureaucrats. And so in the U.S., in Japan, and Europe, debt has been going up at an accelerating rate. Now it's gone parabolic. It's just going straight up. And the interest cost of the government, corporate, and individual debt in all of those countries is soaring. And that's the kind of thing that breaks a financial system at some point, because it leaves a country with no choice. For instance, Japan is the poster child for this, because they're a little further along than everybody else. But they've taken on so much debt at the governmental level that they basically have no way out of the box that they're in, because if they try to push interest rates down to minimize their interest costs on all their debt, that causes the yen to fall in a disorderly way. And we just saw that happening lately here, where the yen was crashing, and the Japanese government stepped in and sold their dollars to buy yen to push the yen up, and that caused their stocks to crash in Japan. And that's just where they are. Whatever they do is going to cause a crisis in some aspect of their financial system until the system itself breaks down. And Europe and the US are in that space almost. We're almost to that point, and we'll be there shortly. So you're going to see the whole world in the kind of financial box where there's no fix, where whatever we do to address one crisis will cause some other aspect of the financial system to go into crisis. And in a situation like that, well, actually, we've never had a situation just like the current one, because in the past, countries have blown up their currencies all the time. They take on too much debt. They try to finance it by creating new currency, and that causes the currency to crash, and you get a crisis followed by a currency reset. The difference this time around is that it's global. It's not just one country screwing up in the context of a sound money world. It's everybody screwing up in the same way, basically, at the same time. So we don't know how this is going to play out, except that it's liable to be bigger and more spectacular when everything starts to fall apart. And historically, when a given country does something like what we're all doing right now, the currency collapses. Everybody who owned the currency and trusted the government is impoverished, and everybody who didn't trust the government and owned real assets that can't be inflated away, like land and gold and silver, and a handful of other real things. And in today's case, you would talk about energy assets too. The people who didn't trust the government and owned those real assets are the ones who end up with lots of capital to start rebuilding from the rubble. So, we should really want to be among the people who end up with capital, and that's the intellectual challenge. What do you do in a world like this when clearly the big systems are breaking down? How do you protect yourself and your family from the worst effects of it? And gold and silver are among the things that have always worked in the past. So it's highly likely that they'll work going forward, and that's a fairly easy thing for people to get into. So it's one of the things I talk about most, because it's one of the quickest fixes if you want to get out from under financial assets that the government is currently blowing up.
Okay, and definitely I want to go into a little bit more how you're approaching gold and silver. But just before we do that, I had it in mind to ask you if you're in the camp of seeing a recession in the US. And clearly, it's much worse than a recession, and not just in the US, but at a global scale, as you've been outlining. I'm wondering, we've been hearing about recession issues for quite some time, and I think many people are surprised to see how far in the US it's been able to be kicked down the road. So is that surprising to you, or are we just used to having that instant gratification of things happening faster than we think? What do you think is going on there?
Well, no, you're right. We should have probably gone into a recession a few years back. But here's why we didn't. One is that during the pandemic, especially in the US, the government said, okay, you don't have to pay your rent anymore. You don't have to pay on your student loans. And here, we'll send you some stimmy checks. So Americans build up a lot of what the economists call excess savings, which is money in the bank that you wouldn't be expected to have if you just extrapolated past trends. That's extra spending money, basically. And so we've spent the past few years using that money to cover our day-to-day expenses. And that spending has kept the economy out of recession. Also, at the same time, the federal government has been running massive deficits, which is to say they're borrowing money and then dumping the proceeds of that borrowing into the financial system, which is also stimulative. So get those two things together, and the economy has grown when maybe it wouldn't have otherwise. But something is happening now that will probably lead to a recession going forward. And one is that we spent all that excess cash, and now we're into negative territory. We're actually borrowing, usually on credit cards, to put food on the table and gas in the car and pay the rent. And so you got more and more people in the US carrying growing credit card balances that are charging them 20 to 25% a year, which is a recipe for bankruptcy, right? So you get something like that going, and eventually consumer spending starts to roll over and decline. And the U.S. economy is 70% consumer spending. So when consumers stop spending, the economy stops growing. And the other thing is that, the U.S. government has borrowed huge amounts of money in order to keep recession at bay lately. But now the U.S. government's interest costs on that debt are starting to soar. So we were at like $400 or $500 billion a year in interest costs on our debt a few years ago. Now it's above $1 trillion a year and headed north in a hurry. We're going to hit $1.6 trillion a year in just interest costs on the U.S. debt pretty soon. That's also unsustainable. So you put those two things together, and you get a slowing economy, which probably turns into a recession after the election in the U.S. So starting at the end of the year, the economy starts to slow down in a dramatic way, and then it becomes an issue of whether, okay, this is a recession, but is it going to be worse than a recession? Are we back in 2008, 2009, where we're talking about, another Great Depression if we don't bail out everybody in sight? And I would say probably that's the case because we have so much debt, so much bad debt built up around the world in the past decade, that when economic growth slows, which is to say when cash flows that are now servicing that debt diminish, a lot of that debt is going to blow up. In other words, we're going to have a lot of office buildings, for instance, go bankrupt and be sold at huge discounts, which will impact the local and regional banks that have a lot of that paper on their balance sheets. And then people will pull their money out of those banks, which will make the banks even more financially fragile, till the government has to step in and bail them out. That's one scenario. There's a bunch of other scenarios in which different parts of the financial system blow up in the next recession. So we should expect a recession, an equities bear market, and then a government bailout of basically everybody in sight. And then the question becomes, is it possible for the world's governments that are already this deeply indebted to bail out their banking systems and their pension funds and their insurance companies and their real estate sectors? For the U.S., that would take another $10 trillion just right on top of the $34 trillion that we've got now at the federal level. And decent chance that it's not possible. Maybe we're in that box that you can't get out of. And no matter what we do, a gigantic crisis is coming. And I think that that's the kind of thing you want to be protecting yourself from. So, if equities are going to tank because we have a nasty recession that lowers corporate profits, then maybe you want to sell your stocks and go to cash. Or if you're financially savvy and risk tolerant, you might want to start shorting some of the big stock market indexes in the U.S. Short the NASDAQ, short the S&P 500. Which, if you want, I can go into the details of how you would do that. But for now, I'll just say, do it. Bet against the stock market. So, you do that, and you load up on gold and silver, and you buy some energy assets like very high-quality oil and gas properties. You can buy those stocks and have that be among the very few stocks that you own, along with maybe some gold mining stocks. And then just try to ride this thing out. And I think there's a very good chance that with all the volatility that's coming, that people who time this right, don't just ride it out. They actually make a lot of money. If you've seen that movie, The Big Short, or read the book, The Big Short, that's a fascinating story of people who saw the housing bust coming in the previous decade. And instead of just going to cash, they figured out ways to bet against the companies that were involved in the housing market, the big banks, the home builders, and a lot of the paper that those entities were producing and selling. And, it didn't go well for the guys trying to short the market for a couple of years because they were too early. But it finally worked out for them. They made life-changing money. They were among the best institutional investors who have ever lived for that 2-year stretch when everything was falling apart. So if you're savvy and aggressive and risk tolerant, this is a chance maybe to do that same thing, maybe to take that bet that the financial system was headed for another crisis and see about ways to short the stock market and maybe make life-changing money. It's not a thing that regular people should do with a large amount of their money, but it's a thing that some people might want to try and see it's a way to be one of the really big winners from one of the scariest economic times in history. And if somebody's going to do it, it might as well be us.
Yeah, I think if you would like to share more details on how people might want to approach that, that would be great. I think it would be interesting to look at, how, of course, every person is different, but how much of your portfolio you might want to allocate to this, what other strategies a person might want to pursue there.
Okay, well, shorting in all of its forms is dangerous enough that you never want to make it the majority of what you're doing. Maybe 5 or 10% of your net worth can go to shorting if you're convinced that there's a crisis coming. And there's a lot of ways to do it, a lot of ways to bet against stocks. For instance, the simplest one is just to sell a stock without owning it first. So you basically do exactly what you would do if you were going to buy something, except you click sell instead of buy in your brokerage interface. And your stockbroker will go out and find those shares somewhere and borrow them from another account and then sell them and credit you with the cash. And that if that stock goes down, you keep most of the cash and you use whatever's left over to buy back that stock at a lower price, and you get to keep the difference. And that's one thing. Another thing you can do to short the market is to use equity options called puts that are basically contracts, and you buy and sell them the same way you buy and sell a stock via your online broker. And put options are basically bets that something is going to go down in price. So you can buy puts on the S&P 500 or on the NASDAQ, which will go up if the overall stock market goes down. And you can choose different time frames from, a month or two all the way out to a couple of years. And I do that. I buy long-dated puts that give me 2 years to be right about the stock market going down or about a given stock going down, and see what happens. And then if it doesn't quite work out, I wait a while and buy some more puts that are still 2 years out on the assumption that at some point this thing is going to blow up, and those puts are going to go up to some multiple of what I paid for them, and that'll cover all the ones that didn't work out. Now, this doesn't always work, but there's a timing situation in which they will work. In other words, if you buy long-term puts, make a bet against the S&P 500 or the NASDAQ, and you do it in a time frame in which, say, 6 months from the purchase date, that happens, stocks really tank, then you can make a lot of money. And then you can use that money to protect yourself from all the other bad effects of an equities bear market and a recession. Maybe that covers 6 months of living costs for you if you lose your job, or maybe that bails some family member out of a tough financial spot. You can pay off credit cards of your kids or something like that if you have to. There's a way in which seeing a crisis coming and acting on it can make you a lot of money, which you then can use for important things. So that's the kind of thing that I think, again, don't do it on a big scale. Don't do it with most of your money, but it's something you can do that has a fairly high degree of working out right now, because we are kind of in that death spiral where some crisis has to happen, because whatever we do will cause one crisis or another. It's just we don't know which crisis is going to come because we don't know what choices governments are going to take or make when things really get going. So, I think a crisis is coming. We should all be preparing for it, and that's the intellectual challenge. How do you personally, given what you're like, your risk tolerance, your ability to sleep at night when you've got some risky plays out there, and what among the choices that you have you want to go with, given what you know about yourself. And most people should just, with a crisis coming, sell some stuff and raise a bunch of cash. And other people might want to do some more aggressive things. But it's a fascinating time, and it's an interesting intellectual challenge. I on my Substack newsletter, that's a lot of what we talk about is we see this stuff coming, but how do we get it just right? How do we get the response right? And I don't think there's any guarantee, but I think there are a lot of choices out there that could work out very well.
Okay, that's really interesting. This is one approach you can take with part of your portfolio. I'd love to hear more about how you're approaching gold and silver right now, which we started talking about at the beginning there. So I imagine you've got a physical metal component there, and then you mentioned as well some stocks. So how is that divided for you? How are you looking at that at the moment as we're heading toward this scenario?
Yeah, with gold and silver, you want to start with the safest option and then work your way outward from there. And the safest one is to buy physical gold and silver in 1 ounce coins or bars, take delivery of it, and then store it in a place where it's accessible and where, obviously not very many people know that it's there. And then if things get really crazy, you have this wealth that doesn't have a counterparty risk. In other words, nobody else has to keep a promise for that silver and gold to be valuable and to be useful. So you do that. And then once you've got what you consider to be a good amount of physical gold and silver that's accessible, then you can branch out a little bit. You can buy gold and silver mining stocks, which in good times for gold and silver go up more than gold and silver do if you choose the highest quality options there. You buy some of those. And you can also store gold and silver bullion, that is gold and silver that are just the metal. They're not necessarily legal tender, although they can be, but that's not what they're used for. They're not used for spending in today's world. And you don't pay a premium because they're rare or anything. You just pay for the metal in the form of those gold coins and bars. You can store them remotely in vaults that people run and insure for this purpose. People can store some of their wealth remotely and have a pretty good guarantee that it's there because it's run by people who are considered trustworthy in the space. And then, finding who that is a whole intellectual challenge in its own right. But, you pick somebody who has a good reputation, who's running a vault service, and you buy some gold and silver, you have it shipped there, and they keep that gold and silver under your name. That's called allocated gold and silver. You own the actual coins and bars that they have in a vault for you. And then that's something that probably will be safe and probably will be more valuable with time. And from there, you can branch out geographically to having some gold and silver stored overseas, because you never know which country is going to do what crazy stuff, right? Maybe your country is the same one, maybe it's not when things really get going. And so having some wealth stored in a different location is something that high net worth individuals do it all the time. Rich people move their money all around the world. And if it's possible to do that, it's something that we should all be looking at too. And it's not really that complicated to do it. There are companies that are set up for that purpose. So that's another thing you can do, but another thing that you have to educate yourself about, look into. And then there are people who speculate in the precious metal space using options that we talked about before, only call and put options. A call is a bet that something is going to go up, a put is a bet that something's going to go down. And if you really think the crisis is imminent, and I get a lot of questions like that on my Substack, is should I buy gold puts or should I buy gold calls right now? Because I think it's going to happen. I think something big is going to happen. And normally I say, nobody can call timing perfectly, and options are dangerous. But if you're convinced, an option is a simple way to make a directional bet on something like gold with a limited time frame. You can bet that in the next 6 months it's going to happen. Gold and silver are going to spike. So anyhow, all of those things are part of a mix in precious metals. And how you mix those different things together, again, depends on you. What's your risk tolerance and how much cash do you have to throw at this? And the vast majority of people should stay on the safe side of the spectrum, where you get your physical gold and silver, and maybe just dollar cost averaging into it, where you spend a fixed amount of dollars each month to buy some gold and silver bullion, and then you have it delivered or you have it stored in a safe place, And that's most of what you do. And people who are a little more risk tolerant and want to actually make serious money going forward, there are all these other things you can do too. But within the gold and silver space, you kind of have the wind at your back because they will tend to go up in price as the financial system starts to spin out of control. So that's very helpful. There's a saying, a bull market makes everybody a genius, right? And so with precious metals, over the next, let's say 5 years, nobody knows what's going to happen in the next 6 months, but in the next 5 or so years, all the gold bugs are going to be geniuses because gold and silver are going to go up dramatically. And so that makes it much easier to implement a strategy that involves buying precious metals because you're probably going to be okay. Even if you don't make all the right choices, you've got a wind at your back. And more than likely, what you end up with is going to be worth more than the money you put into it. So I think that's the nice thing about being in a bull market. It minimizes your risk because the thing that you're buying is just going to go up, in whatever form you buy, you're probably going to be okay.
Okay, I think that's all really good to go over. And I'm curious to also get your take on the gold stocks. So you had mentioned when the price goes up, the quality names should outperform the gold price. And I know we have a lot of people in our audience who are looking at the gold price, they're looking at their gold stocks, they're wondering when they will see this outperformance. And of course, some are moving, but what is your feeling there? Are they moving as you would expect given the high gold price? And where are you seeing the most opportunity right now among the gold equities?
Yeah, one of the interesting things that hasn't happened this time around is that the gold stocks aren't outperforming gold itself. And normally when gold hits an all-time high, the gold stocks are rocking. They're the best performing sector in the market and everybody's making money. And that's not happening this time around. And I think that's the case for two reasons. One is mining lately has become a very hard business. There are a lot of things happening out there that haven't happened in the past for the miners. And one of the big ones is geopolitics. A lot of countries are just not that interested in having a big gold mine or a copper mine or silver mine or whatever in their communities because there are environmental concerns and there's land use concerns. A copper mine that's 300 yards wide is an awful lot of home sites that don't get to be built, right? So you have housing issues in place of that copper mine. And a lot of countries are, one, they're demanding a bigger cut of the profits from miners. And two, they're flat out shutting down some mines. There's a big copper mine called Cobre Panama that just one day the Panamanian government shut it down and it still hasn't reopened. Mexico now is talking about banning open pit mines, which is where you basically just strip mine a area. You have a big pit that you can see from above it and everything, as opposed to an underground mine where you dig a hole and go down into the ground and get gold and silver out or whatever. And Mexico's thinking of just banning the open pit mines. So that means a lot of miners they found that gold and silver and they're getting ready to dig it up and sell it at a huge profit may not be able to. And that's spooking a lot of people and leading to gold and silver miner prices, not being as high as they would be otherwise. And I still think the best miners that avoid the whole geopolitical issue are still going to outperform gold and silver, but it's a tougher call now than it used to be. And especially for the little guys. Normally, if you're a really aggressive precious metals investor, you start looking at explorers, companies that don't even produce gold and silver yet, but they found some. And they're trying to delineate the reserve. They're figuring out exactly what they've got. And then if they find out they've got a lot, they can sell out at a profit to a bigger company that'll come in and actually mine the gold and silver. Usually those things are like lottery tickets in this kind of a market, because if you get one that works, it goes up 1,000%. That's kind of not happening either. But all things considered, I think that is fixed by a higher gold and silver price. If gold, which is $2,500 an ounce right now, goes to $3,000 an ounce, a lot of mining stock investors are going to lose their caution and they're going to say, okay, I got to be involved in this space. And this is a high quality miner. Let me buy it. And so those miners will outperform gold at that point. And, we just have to wait for it to happen. And we have to be extra selective about the mining stocks we buy because there are going to be some unpleasant surprises out there. Well, there have already been some, but there are going to be more going forward. And we want to do our best to avoid those unpleasant surprises. And one thing you do in that kind of a situation is you look at jurisdiction. In other words, what country is this mine in? And so you want it to be in one that's very safe, like the U.S., which generally treats its miners respectfully. And maybe Canada, which historically has, but lately, Canada's changing in some ways in terms of regulation and taxation. And so that's not the lock that it used to be, but it's still considered a good jurisdiction. So you want to make that paramount when you're looking at a miner in this kind of a market. Where is it? And then what do they have? And if the answer to both of those questions is favorable, they're probably okay. But you need to be more careful than in the past.
Right. And when we look at the gold stocks and thinking about when are they finally going to get going, what's going to happen there, one comment I've heard pretty often lately is we need to see some generalists come back into the market. We have everybody here who's been here for years waiting for this. We need some external people to come back in. But just listening to you talk about how we've got this worse than recession scenario coming, it makes me a little bit concerned that maybe these people aren't going to have money to even get there. So any thoughts on that and the generalist crowd when it comes to gold stocks?
Well, yeah, you definitely want the non-gold bug population to get interested in gold stocks at the peak of the cycle. That's when it happens. The last couple of years of a gold silver bull market usually has a lot of outside money coming in, and there are people who don't necessarily understand the concept of mining very well, but they see something moving. It comes up on their momentum screens, and they want to jump aboard that momentum. And you get a lot of people doing that towards the end. I think we will again, but the recession coming thing is pretty tricky because normally what happens in a recession is the economy slows down, people get very worried, stocks tank, and that pulls down even the gold and silver stocks. And that happened in 2008 and gold and silver themselves and the mining stocks related to them just went straight down. And it happened in 2020 when the pandemic hit and everybody was scared. Stocks tanked, gold and silver tanked, and the gold and silver mining stocks all tanked. And so since we've got that coming, that's the kind of thing that should make you a little bit more cautious than you would otherwise be with gold up this high with mining stocks, because we might have that kind of a baby being thrown out with the bathwater thing in the equities markets in 2025. But history is actually kind of favorable for something like that too. If you look what happened in 2008 and 2020, yes, gold and silver went down, the stocks related to them tanked, but they were V bottoms. In other words, they fell very quickly, and then they bounced very quickly out of that and went on to new highs. So I think the worst case scenario for gold, silver, and the gold and silver miners is another repeat of that, where they do get hit hard for a little while, but that equities bear market and that recession causes governments to panic and come in and just flood the system with newly created currency and to push interest rates down back down to zero again. And that causes the gold and silver miners, along with gold and silver, to just spike off that V bottom and then have a really nice run. So we don't want to miss that spike, really. And it would be nice to miss the plunge, but nobody can really time things with that kind of an accuracy. So I think the best way to approach something like this is to just gradually buy precious metals related assets, knowing that there could be some squiggles out there and maybe even a couple of months when everything goes down hard, but also knowing that on the other end of that worst case scenario, that V bottom, is a really spectacular run when panicked governments just decide to inflate their currencies away and send precious metals, which are protection against inflating currencies, through the roof. So, what I'm doing, I'm respectful of the the impact that a recession and an equities bear market could have on precious metals, but I'm still owning them and still buying really high quality assets a little at a time. With the idea that, okay, if they go down, I'll buy some more because I know what's at the other end of that V bottom, and it's going to be spectacular. So, um, accepting that we can't know what's going to happen in the near future, I think the best way to approach precious metals in general is not just to load up the truck and buy everything right away, but to buy a little bit at a time and stay as close to possible to the highest quality assets in whatever category you're working with. Just buy good names in good places, and you're probably going to be okay. And resist the urge to speculate. If some little miner that you've never heard of just doubled, don't don't bet a large amount of money on that doubling trend continuing to the next and then the next doubling after that, because you just don't know. You cannot predict that with any certainty. But if a really big, high-quality miner like Franco-Nevada is a good name in this space, and they've had a couple pieces of bad news in the last year, but they're such a high-quality company that bad news is basically just a buy the dip signal. Something didn't work out for them. Their stock went down. But they've got so much else going on that's really good that you can be comfortable buying that stock after the dip. So you want stocks like that, of that quality, and you want gold and silver in a form that's also trustworthy in the sense that you know exactly what you're getting, and it's well understood by other people if you need to sell it, and it's stored in a very safe place. So you want to choose the least risky options for whatever strategy you're looking at in this world. And that'll solve a lot of the problems of the, equities bear market and V bottom and things like that. Because what you have will be so high quality that you won't worry too much about it. You'll know it gets through any little rough patch.
Okay, I think that makes total sense. Really good advice. And I don't want to keep you overly long, but before I let you go, I have what I think, we'll see if it's a fun question. I think maybe it'll be fun. So given everything that you've been laying out, which is not fun, what is gold's price potential? And I'm going to throw in silver as well. We have silver, although gold is at all-time highs at the moment, silver hasn't yet done its catch-up. So price potential for those metals in your mind.
Yeah, if you don't make me name a date, I'm happy to talk pricing because you never want to name both. Yeah. All right. So a lot of the people who have run the numbers on what it would take to back the fiat currencies of the world with gold. In other words, to go back to a gold standard where maybe 40% of the key currency that's out there is backed by gold. The price of gold that you would have to make that possible is $10,000 to $20,000 an ounce, and that is not taking into account all the panic buying that might happen when everybody has lost faith in their currencies. That's just if we decide to go to a gold standard, technically, how would we do it and at what gold price? And so you get $10,000 or $20,000 there. So I'm very comfortable saying $10,000 an ounce is something that gold is headed for. Now, gold and silver tend to trade in a relationship. It's a very wide band, but still, there's something called the gold-silver ratio, which is the number of ounces of silver that it takes to buy an ounce of gold. And that usually fluctuates between 80-ish ounces of silver per ounce of gold down to maybe 30. And the higher that number is, the cheaper silver is relative to gold. And the more it's going to outperform gold, getting back to the low part of its range. So right now, if you apply that to silver, $10,000 gold gets you $300 an ounce to $500 an ounce for silver. So I'm comfortable with the lower end of that range. Let's say, $100 to $200 an ounce, I think is probably going to happen. $300 an ounce silver is conceivable, but it would be a place where you start to sell to the generalist money that's coming in. So $10,000 an ounce gold, $300 an ounce silver.
Okay, I think that sounds like a really good place to wrap it up. Thank you so much for going through what's going silver. I'll put it back over to you one more time. As I said, we'll have all your details in the video description for people. But if you want to let everybody know where they could find you, what you're doing, that would be great. Or if you have any other final thoughts to share.
Yeah, I'm at rubino.substack.com, and I'm publishing a newsletter that is aimed at actionable ideas for getting us through what's probably going to be a really chaotic decade. And so far, so good. It's going on a couple of years old, and an interesting community has sprung up around it. So you can come, you can check it out and get most of the content for free. And then there's a little bit behind a paywall that if you like what you see, you might want to try for.
Okay, very good. Well, thank you so much for coming on to talk. It was a great first conversation and definitely hope to have you back in the future.
Great. Thanks, Charlotte.
Of course. And once again, I'm Charlotte with investingnews.com, and this is John Rubino. Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.